It's Monday, the 15th of February 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. Today's headlines: the Pfizer vaccine for COVID-19 will be rolled out this week, triggering the biggest logistical exercise across this country since World War II. Plus, Wall Street and European equity markets surge, the government's under pressure over the job seeker allowance, and why online retailers are buying up bricks and mortar. The first Pfizer jabs will arrive in Australia by the end of this week, setting in train one of the biggest logistical exercises in post-war history. Around 3 million Pfizer doses will be given by the end of June, according to Federal Health Minister Greg Hunt. Thus far, the Pfizer vaccine is the only jab approved by the Therapeutic Goods Administration, but another 50 million of the AstraZeneca doses will be available in coming months, assuming the TGA approves its use. Mr Hunt said he hoped that would occur shortly. Frontline health workers, including emergency department and intensive care unit staff, and aged care residents are among the first in line for the doses. So too disabled Australians and workers in disability care centres. That will cover around 700,000 people in the first 6 weeks. One of the toughest groups to access will be multicultural communities, particularly those who don't speak English, Mr Hunt said. Yesterday, Victoria recorded 2 new local cases of coronavirus, taking the Holiday Inn cluster to 16. There are also 2 new cases on Saturday. The state remains in lockdown until Wednesday. There were no new community transmitted cases anywhere else, and New South Wales has reached that all-important 28 days without transmission. The rollout of the vaccine is the most important event in 2021. Its success will have far-reaching health, economic and political ramifications. Let's hope it goes smoothly. In overseas news, Wall Street hit record highs over the weekend, with the S&P 500 and Nasdaq both closing up ahead of an expected government stimulus package this week. It was more the traditional companies in the energy, financial and material sectors that did well, while tech stocks were sold off. US markets are closed tonight for the US President's Day holiday. European markets were up over the weekend, with rises in bourses across the region. The Stoxx Europe 600 closed 0.7% higher and is trading at year-long highs. Donald Trump's 5-day impeachment trial ended with the former president being acquitted after the 100-seat Senate failed to get the 67 votes needed for conviction on the charge of inciting a riot. The final vote was 56 to 44. The US Senate Minority Leader Mitch McConnell, who voted for acquittal, afterwards said Mr Trump was practically and morally responsible for the deadly attack on Capitol Hill last month. Australia suspended its quarantine-free travel bubble with New Zealand after a couple and their daughter from Auckland were detected with the virus over the weekend. And the British economy shrank by almost 10% last year. That's the worst annual performance on record. The only good news was that the final quarter growth was plus 1%, driven by government spending. Locally, the drums are beating for the government to not cut the job seeker benefit back to its pre-pandemic level of $40 a day. Reserve Bank Governor Philip Lowe has already said it wasn't fair, and now the Chartered Accountants Australia in New Zealand, an influential peak body of accountants, has said the rate needs to be higher. Currently the rate is $560 a fortnight, plus a $150 pandemic supplement. I think it's very likely that the government will now alter the base level at the end of March. And the Australian's reporting this morning that figures today will show that 2.3 million workers moved off JobKeeper in December. The 6 largest financial service companies in the country, caught up in the fee-for-no-service scandal fully revealed in the Hayne Royal Commission, have paid or offered a total of $1.24 billion in compensation to customers who suffered losses. AMP, ANZ, Commonwealth Bank, Macquarie Group, National Australia Bank and Westpac offered the amounts to customers who paid fees for financial services but didn't receive anything in return. One sector not hurt by the Victorian lockdown was the Melbourne housing market. 88% of houses that went to auction in the city on Saturday sold. It was the same rate in Sydney and both were higher rates than a week ago. The Chief Executive of Crown Resorts, Ken Barton, issued a statement to the ASX on Friday saying he hadn't resigned from the group despite a New South Wales inquiry last week finding him not up to the top job. His position undoubtedly is untenable. Chair Helen Coonan will have little choice but to sack Mr Barton if he doesn't step down. And according to media reports, she may well end up running Crown as executive chair. Earnings season continues this week. Some of the big names include BHP tomorrow, Rio Tinto and Coles Group on Wednesday, Wesfarmers, Fortescue Metals and CSL on Thursday, and QBE on Friday. What we have learnt so far is any company that misses earnings guidance will be sold off, and most outlook statements are pretty upbeat. And there's a great story in the Financial Review over the weekend about online retailers buying bricks and mortar shops not for the stores or stock, but for the brand, customer database and domain names. Last month, the 243-year-old British department store Debenhams was bought by 14-year-old Boohoo. The online fashion retailer plans to close the stores and cut 12,000 jobs. But the customer data and online business was worth the £55 million price. It's well worth a read. That's a Fear and Greed business headlines for today. Make sure you've hit subscribe so you don't miss out. There's also more in today's full Fear and Greed podcast, including an interview with ANZ senior commodity strategist Daniel Hines about the commodities impacted by the rise of electric vehicles. I'm Sean Aylmer. Enjoy your day.